guys, this is Jace. Welcome back to MEXC Fans channel. Today, I would like to introduce a very popular trading product. This product can be traded like spot, but it can generate multiple returns compared to the spot trading. Also, compared to futures, it is a low risk and easy to operate product. Can you guess what is it? Yes, it is the Leveraged ETF. Leveraged ETF is a new derivative in the crypto space. In just a few years after its launch, the daily trading volume of leveraged ETF products on the crypto exchanges has reached $52.81 billion. Among mainstream exchanges like Binance, MEXC, and FTX, these exchanges have 3 years of mature experience related to the product, and their 24-hour user trading volume is at the top 3 ranks. Maybe some don't know what a leveraged ETF is. Okay, a leveraged ETF is a type of perpetual leverage product that magnifies the price changes of the spot product and aims to provide leverage gains of the underlying index. In other words, a 3x leveraged ETF seeks a triple the return of an underlying asset. The name of the leveraged ETF is represented by a cryptocurrency plus leverage plus long or short direction. For example, BTC3L means a 3x long for Bitcoin, while BTC3S means a 3x short for Bitcoin. If the Bitcoin price goes up by 1% on that day, BTC3L will go up by 3% and BTC3S will go down by 3%. What are the advantages of leveraged ETF? First, although ETF is leveraged, it is more like spot. Therefore, we can multiply our returns by simply buying and selling tokens. Take the MEXC Leveraged ETF product as an example. This is the candlestick of Bitcoin daily chart on spot trading. If we bought the 1,595 USDT on spot on 14 July 2021 and sold it at 42,278 USDT on 30th July, then our spot gains can reach 33.81%. Now, look at the chart of Bitcoin 3L. If we bought Bitcoin 3L at 0.088 USDT on 14 July and then sold it at 1.43 USDT on 30th July, then our gains can reach 1,522%. Second, leveraged ETF positions have higher capital utilization. This is mainly because there is no need to pay margin when opening a leveraged ETF position. Opening and closing a position is like buying and selling on spot trading, so there is no need to occupy part of the position as the margin to raise or lower the liquidation price. Third, with the leveraged ETF rebalancing mechanism, it has a compound interest effect. After rebalancing, the profit of the position is automatically added to the newly opened position, which is more suitable for unilateral market trend. Due to the compounding effect, the gains will be much greater than the same leverage on futures product. Of course, any product has its own risk, so it is very important to understand your risk appetite before investing. So let's find out what are the risks we should pay attention to. First, leveraged ETF is suitable for a unilateral trend. As shown in this graph, the red mark is a unilateral uptrend, the green mark is a unilateral downtrend, and the yellow mark is a sideways trend. Then we can buy Bitcoin 3L to long in a unilateral uptrend and buy Bitcoin 3S to short in a unilateral downtrend. However, it is not suitable to open a position in a sideways market, otherwise it will cause erosion. The reason why the erosion occurs is due to the rebalancing mechanism, which is the platform's risk protection system. Rebalancing is divided into periodic rebalancing and non-periodic rebalancing. MEXC's leveraged ETF products will be rebalanced periodically at 12 midnight Singapore time every day. Periodic rebalancing is essentially what the platform does to maintain the 2, 3, 4, or 5 times leverage of an ETF. In addition, the platform also needs to carry out risk hedging on other derivatives platform to avoid the risk caused by the sharp rise and fall of prices, and maintaining the leverage ratio and hedging. Both incur a certain fee erosion. Non-periodic rebalancing refers to the scenario when the target spot price rises or falls by more than a certain range. The position will then be adjusted for the side that experienced a loss on that fluctuation. For example, Bitcoin rises by 15% in a short time, resulting in the Bitcoin 3S falling by 45%. This triggers a non-periodic rebalancing. Some positions will be sold and the leverage will then be restored to 3x to control the risk of the position. These are the advantages and things to take note of for leveraged ETF products. As we mentioned earlier, the leveraged ETFs of Binance, MEXC and FTX are currently the top 3 in the market, but their products are still slightly different among themselves. The main difference is that Binance and FTX issue the leveraged ETF on the blockchain, which is the so-called leveraged tokens, while MEXC issues the product off-chain, which is known as leveraged ETF. I'll focus on explaining the similarities and differences between these two products in our next video. So, have you experienced any leveraged tokens or leveraged ETF trading? Please comment below and I'll see you soon. Bye!